Welcome to FYI, the 4-Year Innovation Podcast. This show offers an intellectual discussion on technologically enabled disruption, because investing in innovation starts with understanding it. To learn more, visit arc-invest.com.
ARK Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARK. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK or podcast guests, and are not endorsements or recommendations by ARK to buy, sell, or hold any security. Clients of ARK Investment Management may maintain positions in the securities discussed in this podcast.
Bitcoin is a relatively new asset class, and the market for Bitcoin is subject to rapid changes and uncertainty. Bitcoin is largely unregulated, and Bitcoin investments may be more susceptible to fraud and manipulation than more regulated investments. Bitcoin is subject to unique and substantial risks, including significant price volatility, lack of liquidity, and theft. Bitcoin is subject to rapid price swings, including as a result of actions and statements by influencers and the media, changes in the supply and demand of Bitcoin, and other factors. There is no assurance that Bitcoin will maintain its value over the long term. ARK strongly encourages any investor considering an investment in Bitcoin or any other digital asset to consult with a financial professional before investing. All statements made regarding Bitcoin are strictly beliefs and points of view held by ARK and/or podcast guests, and are not recommendations by ARK to buy, sell, or hold Bitcoin. Historical results are not indications of future results.
Well, welcome back to the Bitcoin Brainstorm. I'm your co-host, Rod Rudy, and we just recorded an awesome episode with Cathie Wood, the founder, CEO, and CIO of ARK Invest. Of course, we were joined by her colleague, Lorenzo Valente, who's the director of digital assets at ARK Invest. And we had 3 awesome guests. We had Jeff Booth, who's the general partner at Ego Death Capital and also sits on the board of Core Scientific. We're also joined by Frank Corva, who is a former Bitcoin White House correspondent and a contributor to Forbes Crypto. And then also Rory Murray, who leads, he's also the VP of Digital Asset Management at publicly traded CleanSpark. We touched on a lot of subjects in this kind of year-end Bitcoin brainstorm. We looked back on 2025 and also offered a glimpse at 2026. We looked at kind of the state of Bitcoin as it is today. We looked at the real-world infrastructure as it looks like today. Some of the policy changes that have been in place, and look to the future as well there, and just so much more. So hope you all enjoy this episode, and I cannot wait to see y'all in the new year for Bitcoin Brainstorm episode number 20 and beyond. Cheers. I mean, what a year it's been. And this is just so fun. This is, I can't believe it, episode 19. Jeff, thank you so much for joining us. Franks, thank you so much for joining us. And Rory, thank you so much for joining us. And just Lorenzo and Cathie and the entire ARK team for, producing this and distributing this Bitcoin Brainstorm. It means the world.
Oh, well, and you're the mastermind, Rod. So all thanks to you.
Thank you, Rod.
2025 is about to be in the books, Cathie and Lorenzo. Maybe I could kick it off with you guys, and then we go around kind of the room. Like, how are we all feeling from 2025 and kind of feeling going into 2026? Did it meet our expectations? Did it exceed our expectations? Let me maybe start off with you, Cathie and Lorenzo.
A couple of things. Clearly, we've gotten used to up and to the right, but being interrupted by every 4 years by a down cycle. And so I think a lot of people have been fearing a down cycle. We did hit 120,000, happened to coincide with the flash crash on 10/10. And so we're trying to sort out, okay, right now, is there a big whale out there that has not surfaced yet and is somehow related to the leverage that has been taken on in the last few years? We don't think so, but we do not think the probability is 0. So that's one thing. I think the other thing, and so we do have the question of 4-year cycle. Is this it? And was 80-ish thousand the low? So we'd like to see a test here. And if we can get by this year or this cycle with a 30+% drop instead of a 50, 60, 70% drop, that I think will be a victory and will be consistent with the lower volatility that has defined Bitcoin as time has gone on here. So that's the first thing. The second thing is, I actually said, and boy, Andrew Ross Sorkin ran with it when I said on CNBC Squawk Box one morning, well, it seems to me that stablecoins are usurping a role that we thought Bitcoin would play when we put out our first white paper in 2015. And that does seem to be the case. We do see a lot of activity, especially in emerging markets, focused on stablecoin. Stablecoins are serving as the insurance policy that we thought Bitcoin would provide to people in emerging markets as they were trying to protect themselves from confiscation of their wealth, whether it's in the form of inflation or just outright confiscation and capital controls and so forth. He ran with that, but I had to put that in context. That was everything else equal. Well, something else was going on, and that was the gold price moving up as rapidly and as much as it has during the past year. And so the digital gold role of Bitcoin, we think is that much more valuable and probably is more than offset what I just said about stablecoins. So I think we're sorting through that. And I think in terms of the future and next year, we have seen very little institutional buy-in. It is just beginning. And I think if we get the U.S., for example, not adding just confiscated Bitcoin to a strategic reserve, but out there buying, and we don't know if that's going to be the case, but if they were to do so, I have a feeling that would set off what we're all waiting for, which is, the scarcity value to reassert itself again now that we're near 20 million Bitcoin outstanding and we only have 1 more million to go. I think the party has just begun in that way. And so we're still very optimistic.
I think it's been the best year, honestly. Like, forget about price, right? Like, if you look at last year, like, it went from 50K to 100K, like, for Christmas and after Trump. But I think this year, even if price is down or flat, like, the fundamental, I think, setup for Bitcoin and crypto in general, like what we've had this year is the best year by far. I think like 2025 is going to be like one era before that and one era like after that. I think like regulation, the Genius Act, the work that's been done like on the Clarity Act, and I think the net new entrant into Bitcoin and digital assets, I think it's the best setup basically that we've seen in terms of fundamentals for the next years, right? I think you see that like the players that are entering the space, right? And that's why, I mean, maybe we'll talk about the 4-year cycle, but what I feel confident is their companies and people like have a long-term vision, right? They're building stuff on top of Bitcoin or using crypto. They're not here for 6 months or a year, right? And so I think like volatility is going to go down, and also just the use cases, like you've seen like CFTC with the pilot that they want to introduce Bitcoin and Ether as collateral, like in derivatives market, like that is huge, like unlocking new use cases for Bitcoin for like institutional adoption. And so I just like, I'm seeing, like looking at the last A16Z crypto report, they say there's roughly between like 40 and 50 million monthly active users in crypto in general. I think it's pretty clear that the net new entrant, both like user and kind of capital, is very different, right? And is more like long term. Even like all the DATs you see, I was seeing like Jack Mallers with 21 Capital, like they're building stuff for the long term, right? With Bitcoin as a foundation. So forget about price, but I think fundamentals and where the space is, it's been the best year, I think, in a long time, in my opinion. So I think 26 looks super bright.
Yeah, as we say, truth wins out. And I know a lot of people are discouraged right now, especially with the DATs, and I actually think, and we were talking a little bit before we got on, that as a portfolio manager, I much prefer that we're in a period of doubt, and then picking up the pieces is what we all should be doing right now if we really believe what we're saying.
And I'm going to pull on that thread because I do think the adoption side, isn't it amazing? Where we were talking just in that opening, nation states, institutions, companies, and then individuals. It's amazing that all of these participants are eager to get into the game of Bitcoin. And 2025, to your point, Lorenzo, is a great setup. I don't know, Jeff, if you wanted to opine on just a look back on 2025 as well.
Yeah, I think Lorenzo captured it really nicely. And what would you expect in the world today? You kind of riding on the back of exponential technology rails. Right? You would expect exponential everywhere, and that exponential to drive productivity. And as it drove productivity, more people would use those things. So everywhere I'm watching, all over the world, people are using this. We're building on top of it and building a protocol stack that looks like the internet on top of energy, a parallel internet that is being used like globally. And it's growing so fast, and people don't understand how fast it's growing because they're measuring it from a piece of paper. And the piece of paper that they're measuring it from has, when you say liquidity, let's just explore what liquidity means. It means dilute the value of your money faster. And so everybody's waiting like on bated breath for when to buy Bitcoin, when they're going to dilute the value of your money faster, when you know they're going to. Everywhere is going to. And so, but if you measured that outside of that system, from a system that was a protocol bounded by energy, what would it be telling you? It would be telling you with a free market working perfectly, right? And that's what you're seeing. You're seeing an explosion all around the world of people using this and building onto this protocol, and it's growing way faster than most people believe as a medium of exchange. And when you go to these places all over the world, it takes your breath away. And then you come back to the US or something, and people are worried about the price on a piece of paper.
I'm very interested in what you just said. You were speaking specifically of Bitcoin, and I think this is why Andrew Ross Sorkin was so focused on this idea of stablecoins. Wait a minute, you said Bitcoin. You've told me in the past that would be Bitcoin's role. It is true, though, isn't it, that stablecoins are usurping one of the roles of Bitcoin, but you're seeing evidence of Bitcoin being used as a means of exchange. Are you? Maybe you could talk about that a little bit.
Absolutely. Circular economies in regions in Africa and so in El Salvador and all over. I go to these places and it's being used as a medium of exchange. Now, I will grant you that stablecoins is a big part of not outside of what I'm talking about, is a different animal. And again, what is a stablecoin to Bitcoin? A stablecoin to Bitcoin is a guaranteed loss coin. Gains its stability by the thing that's losing value to Bitcoin, right? But most of the people don't know what you know, Kathki, what we know on this call, that this is a protocol imposing a new system, right? And from the stablecoin, if you're in a country like Nigeria, which is losing money faster than the US dollar, the US dollar looks great to you. So you would use a stable coin because it's a relative loss versus your absolute loss would be greater all over the world. But as you start using that, and then and a lot of the technology is being built in with both, then you start to see the relative value of the stable coin losing against Bitcoin, and you start to move. So we're just so early in this cycle, and most people, And most people are pricing Bitcoin as an asset underlying a system, underlying a monetary system, when it's a protocol that's emerging, that's repricing everything. And they're only seeing a tiny fraction of what Bitcoin is because they don't see the other protocol layers that are being built on top.
I want to piggyback on what Jeff is saying because I think it's really important. I want to give a shout out to actually two particular communities, both of which I was in on the ground. One is called Afribit, Kibera. So Kibera is the largest informal settlement. Another word for that is a slum in all of Africa, about 600,000 people living in a slum within the confines of Nairobi in Kenya, the capital of Kenya. I went there to see it for myself, was on the ground. I wrote a piece on it for Forbes. And when you see it being used as a medium of exchange, and the change in the people's psychology there. So they're not using money. So one, it's not money that could be stolen because most of the cash they have is under their mattress because banks won't even let them open an account because they don't even have a minimum required to open an account. It's also, there's an amazing app in Kenya called Tando, which is allowing them to make payments with Bitcoin, and then it's settling over M-Pesa, which is the digital money system, the traditional digital money system there. Again, if you're a refugee in Kenya, you can't get a digital ID. You can't use M-Pesa, but now because of Bitcoin, you can also interface with M-Pesa. So I wrote that piece, and actually I was so sort of taken back by the experience. I think it came through in the piece I wrote for Forbes that the BBC apparently read the Forbes piece and did a 5-minute segment on what was happening in the community, sent a reporter there. And I think all of us know that the BBC has, generally speaking, not been super kind to Bitcoin. This was one of the few videos they did. I think one of the other ones was on Gridless, another great Bitcoin story happening in Africa, Bitcoin mining in Africa. But we saw, because when you see it on the ground with your own two eyes, even this BBC journalist couldn't deny what he had seen. He's like, this is making a tremendous difference. And then another shout out to Bitcoin Akazi, which is a circular economy in South Africa, in a township in South Africa. So an area that has historically, since as far back as apartheid, been the people in this area have been disenfranchised. So a predominantly Black area of South Africa where people have been using Bitcoin since 2022. Again, you're watching people from this area move out of living in tin shacks to proper housing, because Bitcoin is storing value for them as they're using it as a medium of exchange. So I've seen both of these things with my own two eyes, and I would just advise to anyone, if you get a chance, even to go to Bitcoin Beach, which is where in El Salvador and El Zonte, where the first Bitcoin circular economy, or at least modern Bitcoin circular economy, started. You could talk about these things theoretically.
Berlin there too. Berlin,
Bitcoin yep. Berlin. Yep. So it's the experience when you see it firsthand, it becomes much more emotional than theoretical. You see it, you become a believer almost instantly because you can see it in people's eyes and their demeanor that there's a sense of hope, that they're living, that this protocol is acting as a buoy for them, their quality of life, and that they're now included in something, and something that's obviously this burgeoning system that that at the same time we're seeing the BlackRocks are interested in, and these other major institutions. Never, I think, in the world have we seen something sort of lifting all boats the way that Bitcoin is, but it's most prominent within these circular economies.
For Kathy and Ark, the team, because you guys would see this in your other portfolios. What typically happens with the technology that for the monopolies? Right, the technology is always a bottom up, and the monopolies typically do the exact same thing. They try to block the technology. And so if a protocol came and it was a protocol stack that was coming for money, what would that look like to the people that were in the money monopoly? And I think that's what we're seeing. I think that's why we're seeing this bottom up disruption all around the world. Because when we're investing in companies now, some of the talent that's moving into this ecosystem, global talent, and people that take my breath away with what they're building, that most people looking through the lens of a fiat dollar here can't even see. They can't even see how fast this is moving because they're not accessing that same type of talent.
I think what you're saying, Jeff, is we hit escape velocity. When we did our first white paper on Bitcoin in 2015, we were worried about government regulation, and rightly so, given what happened here in the United States, and just a lot of lobbying against Bitcoin. But what has happened is that it has developed to such an extent that it hit escape velocity despite all of that. And now we have some tailwinds behind it in the form of government policies and deregulation. So it's pretty exciting. I agree.
I think that's extraordinarily well said, because that effectively what you're saying is, if I don't do this, I'm going to lose out, because the free market is moving that way anyways. And so I better get on the train and be part of this protocol, or other countries will usurp me.
I'm always so impressed with your eloquence, Jeff, and your eloquence, Kathy. And, you say escape velocity, and that's such a nice way to put it. I put it the meathead market guy way, which is just, hey, if you're at zero still on Bitcoin, I can't take you seriously anymore, right? And you just and I do a very binary.
Tell us what you really think.
I do a very binary analysis.
Rory
of it,
is the
right?
best.
I say, particularly post the 2023 Silicon Valley Bank kind of emanating kind of crisis out of there, and we can argue about whether particularly Signature Bank and Silvergate was sort of a Operation Choke Point 2.0 victims. I happen to believe they were. We got to a point where if you can't see the value in a zero counterparty asset anymore, I can't take you seriously. So I just do a very binary analysis on Bitcoin. I go, okay, is it $85,000, $126,000, $1 million, $42? I don't really know, but I know it's not zero once we go from there. And then we go to a point where it's been spoken about in Federal Reserve meetings. It's on the lips of the most powerful person in the world. It's being discussed as sort of the main plank in the fastest growing product suite of the largest asset manager in the world. It's being talked about in Congress. It's being developed. It's the grassroots Bitcoin part is being developed. It's the offshore options markets are being bought by our onshore kind of technology champions. And you just see this weight of evidence to me that just goes, okay, and I'm with you, Lorenzo, which is that take the price kind of side out. Obviously, we all are kind of here to see an adoption curve over time, but I've never seen a more robust environment for Bitcoin across political, economic, regulatory, geographic, and economic vectors. And so I'm more of a dart at the wall guy, but that to me is, that's escape velocity. And I'm going to start using that instead of just maybe some insults.
Yeah, and maybe we could continue the thread on the adoption side. So I agree with you. When you go outside of the U.S., and Kathy, I believe you recently, with Dr. Laffer, met with President Bukele down in El Salvador, and you kind of see that firsthand. With what Jack and Square just launched earlier, I think it was in November 10th, if I'm correct, turning on 4 million different merchants in the U.S. to accept Bitcoin. I'm just curious, do you guys think we're going to see a rapid rise in Bitcoin adoption here in the States in 2026, just with those terminals and more?
I'll start on that one. We actually own Block and have gotten to know that management team very well. They're not only focused on Bitcoin, but in a big way on AI. And if they could marry those two on the Lightning Network, I remember we had a Bitcoin Brainstorm with roast beef, and we were talking about the Lightning Network in Africa, I'm going to say about 4 years ago, and it really did not take off the way we expected. So very interesting and interested in seeing how that evolves. But I'm going to go back to, I'm just thinking about these merchants very practically. I think if Block enables stablecoins, and Jack has hinted that if there's demand pull, he will and Block will satisfy it. And I think there is going to be demand pull from stablecoins. So I do think this is going to be a little bit of a tug of war from a merchant point of view as to which way they should go, and I think they are asking for stablecoins.
I think at the very, very least, I think timing is the big question here. Is it too early to do something like this? But at the very, very least, it's going to be a touch point. I look at what companies like Musket do. They're based in the UK, and a friend of mine is an osteopath in the UK. And when he offers, he's a Bitcoiner, and what he offers his clients to pay, he just says, hey, do you want to pay in Bitcoin or do you want to pay in fiat? Just allowing it to be a touch point for people to think about that. They don't even have to do it. It's at least if they do that a few times, then it starts to get normalized. And I think we're in this process now of Bitcoin leaving this phase of most people considering it something taboo. And now on certain levels, I mean, on the traditional financial sense, they're thinking of it more as a macroeconomic asset. But on this other sense, as a medium of exchange, we're seeing the adoption around the world. And I do think it's worth noting that it was actually President Trump himself in the press room that talked about when he was putting together, trying to gain support for the One Big Beautiful Bill, talking about the de minimis exemption on Bitcoin spending. So I think that that's going to be a big part of this equation. I think a lot of people's psychology right now is going to be, well, I'm worried. I don't want to pay this capital gains tax if I spend this Bitcoin. But if we could take that away, I got a call about 3 or 4 months ago from Carolyn Levitt's office. They asked me to come in and ask a question about, could you come in and ask us a question in the press room about Bitcoin? It was during Crypto Week. I think this was the week that the Genius Act was signed. And I reiterate, I said the president was in here a few weeks back. The de minimis thing is really important. Is this still something that's on the mind of the president? And she said yes. And I've spoken with other people in the administration since, and they are thinking about it. Cynthia Lummis, other senators are thinking about it. Nick Begich is pushing for this. So I think if we can get to this point where people actually get that experience of spending it, of using it, then it starts to change the game on a much bigger psychological level. I think everybody on this call would be more than willing to do the work of downloading, a non-custodial Lightning wallet, spending it on their own, testing stuff out. But that's not going to be the experience right now for the average person who's not as familiar with the tech. But with what Jack is doing, we have the potential to then make them become more comfortable with it and to just normalize it, to make it be something that doesn't feel taboo or anything along those lines.
Why hasn't the de minimis ruling, why hasn't that moved forward? And how will it? This is the biggest question, and why I did say that about stablecoins. Jack needs to get in there and block to a lobby and say, hey, this is really important for our customer base, which is, tends to be very small business or low to mid income people.
I have seen that they've posted something on Block's website. I don't have the exact link, but on the last BitDevs meeting that I went to here in New York, Block does now have a page saying we need to push for the de minimis exemption. I don't have the exact link. Maybe Rod, I could send it to you after. We could put it in the show notes. Yeah, but I think that they are getting ready to do that. I don't think this is going to be something that gets included in market structure. But I think the good news is that given that President Trump was thinking about including it in the One Big Beautiful Bill, we might see it put into some other omnibus bill. But they are thinking about it, and I know, and I'll give a shout out to my old boss David Bailey. When Trump came to him and asked him, what does the Bitcoin community really want to see? It is this de minimis exemption, this ability to spend without having to worry about tax implications.
Critical in the U.S., but overall for the protocol and everything else, and this is why it's critical in the U.S. What's happening around the world, and if you just think we are inside a system that we all pay 2.5%. Margin, pay for 2.5% to take money, to exact tax, to take money through an intermediary who in money that's losing money. We are all in that system, and it seems normal, right?
It sounds crazy when you say it like that, Jeff.
And every payment goes through the system of a tax to centralization of money in money that's losing money, and this other money doesn't lose money, and it doesn't cost anything. So what would the free market do? And then what would the free market of those people do and build incentives? They would reduce their costs to people who wanted to pay in Bitcoin, and they would give more value to that, and it would just shift. And so the US has to do this de minimis, because if they don't, they're going to lose this to other countries and everything else that are going to just move to the free market. And why would they move to the free market? Because we'll demand it. We will demand it. We always look for more value. We're part of the free market.
Frank, let's have some fun. Handicap this in 2026. Does this happen in 2026?
Oof. I'm going to say there's a 50-50 there.
I like 50-50.
It's hard to say. Like I was not a super political person before taking on this role this year. What I've learned is that there's a lot of friction in politics, government. I think the way it's designed, things move slowly. There's pros and cons to that. So it's difficult to say. I don't know what, there's other things that I think right now, as far as Bitcoin, I would like to see market structure Clarity Act pass with protections for developers so that we don't see what's happening with Samourai again and for other people who are creating privacy preserving tech. So I think just as important as de minimis is privacy preserving tech, and that language that's currently in the Senate draft of Clarity needs to remain in there. That's something we really need to push for first. But ideally, after that, maybe we could potentially tack it on to either the Bitcoin Act that's been proposed in the Senate by Senator Lummis, or the sister act that's been proposed in the House by Congressman Nick Begich. Maybe we could add something about the minimis in that. That would be fantastic if that's there. But I think right now the focus is going to be clarity first, protection for developers, normalizing privacy as we should. And, I think that needs to get across the line first before we start thinking about de minimis, which will hopefully come right after. I covered both the Samourai and Tornado Cash cases. So I spent this summer in the Southern District of New York and got to know Roman Storm as well as Keown pretty well. I hope Trump does. And I also think that I want to say something here, and this is not a slight towards Keown or Bill, but I think that the other thing that we need to really be mindful of is the language we're using about this. We don't want to encourage criminals to use, Bitcoin and stuff. There are people out there like Anna Chekovich of the Human Rights Foundation and the Open Dialogue Foundation, who was Alexei Navalny's chief financial officer. There's Ludmila Kozlovska, activists that are doing really important work around making sure that privacy-preserving tech exists for the type of people who are debanked by authoritarians around the world. And again, you could look at the work that Alex Gladstein and his team at the Human Rights Foundation do with this. So I think it's really, really important that this tech exists. And at the same time, human psychology does play a role in the justice system. The SDNY, the DOJ, I'm sure didn't like people talking about, criminals using this tech. I think Bill and Keown have learned that lesson for sure. I do think that Trump should issue a pardon, especially in the wake of what was the Blanche memos. Deputy Attorney General Todd Blanche in April of this year issued a memo saying, we will no longer go after the people who create this technology, the developers of this non-custodial technology. We will go after the people who abuse the technology. And that is the right way to do things. I will say this, when that memo was issued, I emailed Todd Blanche's, I emailed the DOJ almost on a daily basis for 2 months, trying to dive in further with him on that because I wanted to know what the impetus for that memo was. And I also wanted to get some more details on how willing he was to step in, both on the Samourai and Tornado Cash cases. Unfortunately, didn't hear back. So I'm hoping it wasn't super performative. I'm hoping that they were very serious about this. But I think that the noise that's being made right now on social media in support of the Samourai developers is, we know the president is paying attention. It was brought up in a press conference. And I think, we've had the Genius Act, but we haven't had a ton of other specifically Bitcoin related stuff pass. And I think this would be something good for President Trump to do, to send a signal to the Bitcoin community that, yes, I'm still sort of, I'm on your side. And I think it would be a major signal saying that, yes, we are in support of privacy preserving technology, which will be critical once Bitcoin becomes more widely adopted, or it's critical now, actually. So
that was really well said, Frank. Rory, if I could just slightly change gears a little bit, if we will. Using Bitcoin is actually pretty awesome. And by the way, on the privacy side, I think Dr. Laffer, that's one of his few knocks on Bitcoin is like, it's not privacy focused enough and it needs to be more private money to be utilized, which is, fair criticism. It's fascinating to see how people are now using Bitcoin to really gain even more Bitcoin. Obviously there's like ETFs that you can go and access now in traditional brokerage accounts. But then there's really interesting businesses. And Jeff, you've probably seen this as well in the portfolio of companies you're investing in. But like CleanSpark and others, how they're leveraging their Bitcoin acquisition funnel to then get yield on their Bitcoin. Not in the traditional, like these DATs, which I'm not like super excited about and so on, where they're just financially engineering them, but it's like actually using your Bitcoin. Could you like maybe expand on that? And maybe Jeff, pile on?
Yeah, I appreciate you handing off the football on that. That's definitely, our business, our focus, our talking point, our passion, our life, right? And so this is what we think about all day long is, and I this is it's going to sound like I don't mean it to sound like a criticism. We've been criticized as a community for having shifting narratives over time. And my take on that is that any nascent technology on an exponential development curve is going to look for different product market fit. It's going to fit different things at different places in the cycle, and a neutral permissionless settlement layer with to your point, Jeff, is really just a protocol. It can develop into a whole bunch of different use cases. But from where I sit, I know that there's so much focus on the payment use case, and that I would love to see us get there. But to me, what I see from our vantage point is that Bitcoin is on an indomitable adoption curve as pristine collateral. And that to me is one of the most interesting things that's going on in the world. Now, I think payments will absolutely get there and will engulf kind of from a total market impact eventually. But we're talking about billions and billions of dollars now that are being raised backed by Bitcoin. We're talking about, billions of dollars of CapEx that are going into real things that hurt when you drop them on your foot. Hot rolls of copper off of a boat from Korea. Fabricating containers in Rutledge, Tennessee, plugging in energy and delivery infrastructure. And so all of these things are happening. They're in order to get more Bitcoin. They're backed by Bitcoin. There's a circular kind of financing ecosystem, which is starting here. And I just find it absolutely fascinating. What we're trying to do at CleanSpark is to take that operating business and vertically integrate the financial markets and that we now have access to on top of it. And so I think, Lorenzo, you said it was, maybe 2025 was kind of your before and after. My before and after was, and we always play this game in Bitcoin of, what does it mean to be early? Are we still early? And I will have to raise my hand and say that my view was, once the ETF was launched about 18 months ago, I said that we have now bifurcated into the pre-ETF era and the post-ETF era. And what I think you're seeing is that we have the ETFs. Obviously, we have futures. Kind of the CME futures took some time to reach adoption, but we have futures, we have forwards, we have perps, we have ETFs, we have derivative markets, and so you have this. You now have Bitcoin-backed lines of credit. You have sort of adjacent senior secured and convertible markets that are growing up around this. So the maturation in that system is really significant. And so what I mean when I say vertically integrating the financial structure on top of that, it's that the asset has matured from a size perspective, from an institutional participation perspective, and from a sophistication of financial instruments around it perspective. And so what we're able to do is, we at CleanSpark, we're mining, say 500 to 600 Bitcoin a month. Well, if you're a farmer and you're planting in May and you're harvesting in October, this is a well-worn kind of risk pass. Why do we have commodity markets, and why are they based out of Chicago? Well, it's the heartland of America. They were kind of originally based out of this idea to de-risk these commodity markets, and Bitcoin has kind of the same idea. So, what we can do is that we can be a net supplier to the market, which is that we can either sell a covered call, take that premium income. And what I like to say is that we benefit from the option of, you go on delta.com, you say, I'm going to book my flights. Well, yes, I can book flexible dates. For us, it's okay. We don't mind if we sell on Monday, Tuesday, or next week. And so that provision of liquidity to the market on a consistent basis over time can drive a small premium to the spot price that you can realize. And the reason that we're able to do that is because we're replacing that coin on kind of an ongoing basis. And so it's part of our operating business. We have OpEx, we have CapEx, we are expanding our operations. So we're investing in this business to ultimately drive more Bitcoin to the balance sheet, but that also gives us visibility to some degree over 1, 3, 9 months on kind of our SATS flow, that we can then use these sophisticated financial instruments to then drive even more kind of premiums and a little bit of an enhancement on that from there. Like I said, I could talk forever about this. I think about this all day. I want to kind of leave space for the group, but that's the general idea of what we're doing.
Yeah, what's fascinating to me is the fact that all these companies, whether, Kathy in your guys' venture portfolio or Jeff in your ego death portfolio and so on, they have to have some sort of Bitcoin treasury management position, right? And it's like potentially, right? It may be zero, but we may go into the meathead moment that Rory mentioned before. But I don't know, Jeff, if you're like for the portfolio of your companies, like how they look at it as well.
First, and I understand why this would be so hard to believe. If you just looked at the world as we live in today, the frame of reference that we live in, and just asked a question, if you had this new thing that was impenetrable, it was a open, decentralized, secure protocol bounded by energy, but you had always lived in this other system, then the world would look exactly like it should, because that protocol, it would come in layers. That open protocol would come in layers, and it would give more functionality. But we're so not used to that. We tend to think in technology. We think there's the technology is winner take most until a new technology replaces it. So if we were living in the other system, measuring a protocol that was coming in layers, we would naturally tend to, there's a better technology. There's a new one. There's a new coin that offers more. Bitcoin doesn't offer privacy. It won't offer privacy because it would have to make trade-offs in the base layer. So we wouldn't see the privacy coming on another layer, and we would think it had to exist in another coin. That would be normal, right? So we did so much work at Ego Death before we started this to say, I spent 15,000 hours trying to kill Bitcoin, right? To take the other side and realizing, oh my God, it's a protocol. It is not a technology. It is a protocol that's coming in layers. And from that view, that's why we decided to move all of our time into it. And so from it, now that you're building with all the entrepreneurs in the ecosystem, building the protocol layers, you see a totally different world emerging. You see privacy coming. You see it, and let's use Lightning, the original Lightning network that Kathy talked about 5 years ago. Of course, the next layer of the protocol is clunky at first, just like the second layer of the protocol of the internet wasn't. It had to be tight, like optimize, as everybody races on to try to make it better, being an open network. And so that happened in Lightning. And now you have Lightning, Arc, Spark, Liquid, and you had a payment failure rate before Lightning of a really high payment failure rate, when now you have no payment failure rate. And now it's able to be prime time. And the same thing is happening on all of these layers at the same time. And it's growing so fast, and they're all interoperable, and you don't have to build new technology. You just plug in a piece of somebody else's work and you're off to the races. So now what would that look like if you're funding businesses inside that? We don't have one failure in 16 seed and Series A companies, which in typical, and what that means is they're very efficient use of capital. And many of those are growing so fast and adding Bitcoin to the balance sheet each month because they're building inside of this ecosystem that's giving value as people start to understand it, simplifying it, making it easier, driving that value. And in a high level framework, I would say it would look, what if you were in Venezuela and you just held dollars, US dollars? You would look brilliant to all the Venezuelans that didn't. What if you were in Venezuela and you build a US dollar denominated business and provided value? It would look totally different. So that's what we're doing. We're building, everybody lives in Venezuela today. They just don't know it. Right. and we're building Bitcoin denominated businesses. And so, and from that view, I understand I wouldn't have seen this view if I wasn't fully immersed in this view, because I would be measuring the view from a different system. So I understand, I completely relate to people, questioning Bitcoin and worried about it from their view, because I used to be there. But from this view, you have no worry.
Yeah, I got to give a shameless plug to ARC's newsletter, because why the heck I was not reading it back in 2015. I saw Lisa's LinkedIn post celebrating, I think it was like 10 years and the state of Bitcoin. And you guys wrote that piece. Why the heck was I not reading that and investing in Bitcoin? It's just like...
Well, Rod, one of the reactions we got in those early days was we had just started the company in 2014, And, the journalists and others out there said, oh, marketing gimmick, a marketing gimmick. And yes. And actually that increased my confidence. I said, wow, they're not even going to look into what this is. They just think we've got a gimmick going here. That was fascinating.
Kathy, you've been so far ahead on a whole bunch of this exponential tech and Bitcoin and everything else. But I'd love to ask, because I think I know the answer. But what does that look like, doing the research that no one else will do to be able to come to a conviction, and then sometimes being early, and getting daggers thrown at you because you're early? So what does that look like?
We certainly do. For the most part, we center our research on rights law, which is a relative of Moore's law. Moore's law is a function of time. Rights law is a function of units. So I think what we've learned in these last 11 years is the most important thing for most technologies to scale is the cost decline. The unit growth continues, which enables cost declines and a virtuous cycle. So the big lesson we learned around COVID, we never thought that any supply shock around any event would last 3 years, which it did. And that killed the unit growth of a lot of our technologies. What's interesting about Bitcoin was during those 3 years, yes, there was the bust, the 4-year cycle, the FTX, all of that happened. And, Bitcoin's anti-fragility, was so evident. I mean, when we pointed out to people who are saying, oh, look at what just happened, Silicon Valley Bank and FTX. And I was saying, this proves the concept. FTX was opaque, right? Not transparent at all. Sam Bankman-Fried.
I couldn't find them on my node. I was trying to verify and I couldn't find them.
Couldn't do it.
So what we've learned through these 10 years is that Bitcoin is both a risk-on asset, it is a technology, and it is a risk-off asset as well. And we know that because it was the first first risk asset out of the chute, I should say risk off asset. During the regional bank crisis, sure, correlations 1 to 1, but which asset started appreciating first coming out of that? It was Bitcoin, because it has both risk off, no counterparty risk, and risk on characteristics. So, Jeff, your question was how do we've got a lot of discipline around rights law. And we are going to pay much more attention in the future to supply shocks, because that's where some of our big mistakes were made. But in terms of Bitcoin itself, it turns out we weren't early. We weren't too early, because as we were monitoring it at $250 per Bitcoin, we were in the middle of the European debt crisis. There were still reverberations, and Greece was threatening to leave the European Union. And every time that risk surfaced, Bitcoin moved up in that period. It's like, wow, what is this? What is this? So I think what we've learned is risk on, risk off. It has characteristics of both. When everything's going down, Bitcoin's the most liquid crypto asset, so it is going to get hit. But in terms of the recovery, I think we've seen time and again Bitcoin be a beneficiary of a crisis. People begin to understand its anti-fragile status and how important it is to, from a portfolio manager's point of view, to an asset allocation, right?
I would just add 2 periods of Chinese yuan devaluation to that analysis, and then also periods of capital controls that we've seen, which I thought were very, very indicative of kind of the global flight to quality nature that we're seeing in Bitcoin that you're talking about.
Not only that, I remember when China, this was early 2017, basically banished Bitcoin mining. Basically, everybody thought Bitcoin was going to fall apart because so much mining was done over there. Quite the opposite happened. That was the beginning of a massive move from less than $1,000 to $20,000 in 1 year.
And I know we're going to run up on time here shortly, but I am curious, especially from an energy standpoint, like AI is really, really interesting right now. And a lot of these bigger companies like CleanSparks and Cores and all these other ones are moving a little bit more, shifting their gears towards the AI HPC world and less so on specifically mining. So I am actually very interested if I'm going to tee up kind of like bold predictions for 2026 and go around. I do think we're going to see a much more decentralization in hash rate as some of these larger players that have huge Bitcoin mining specific farms start to reallocate their infrastructure towards AI HPC. So and I think that's a huge net positive for Bitcoin in general, because that hash rate is going to be not only across the US, but across the world in a really, really cool way.
Rod, can I just pick up on that just really quickly? Because I'm on the board of one of these, but also on this is market structure of what this looks like and people making mistakes and looking how it will always look the same. Bitcoin mining can't not centralize because it's the free market. And what ends up happening is you secure energy at a certain price. And if you're in that spot, if you secured energy at that certain price, and as more and more people compete for it, you're losing money on your Bitcoin. And you can only do it that for so long. And if you try to change the rules to accept more inscriptions to be able to keep your asset locked in, you just go broke faster. Right. So what happens is the race, a free market is incentive to compete. And it's a competition for lower cost energy and higher compute all across the globe. And that's why this thing just decentralizes continually. And that I'm saying that from one of the giant hyperscalers that is watching this, right? And has already secured really great energy, has done really well in Bitcoin. But of course, you're going to sell that energy to people who are going to pay more for that energy instead of losing money on your core operations.
I'm actually excited, and no offense at all, I actually love what CleanSpark is doing, but I'm excited to see physical infrastructure for mining decentralized as well, not only from the bigger companies that are the bigger pubcos that are doing mining here in the United States, but I mentioned earlier a project called Gridless in Africa, which is doing incredible work, not only mining Bitcoin using perfectly renewable hydroelectric power in rural regions of Africa, but that then contributing to lowering energy costs in these rural regions, which is making it easier for children to study at night because now energy is cheaper. They're not studying next to paraffin lamps, getting sick. So a shout out to Eric and Janet and the crew at Gridless for what they're doing. Another thing that's really exciting is I'm in New York City, yet I'm mining Bitcoin in my living room right now as I have a space heater that's doing that for me. And I do work with this company. I do some advising to Heatbit, but there are a number of these companies starting, and I don't think that technology has been perfected yet. But even a shout out to the BitX crew. I had my BitX sitting here, my BitX miner. I think it's interesting that we're in the early stages of making mining more accessible to the average person like myself, who's not super technical, but definitely interested in decentralizing the hash rate. And I think this technology only gets better over time. And I think to Jeff's point, mining, I think there's no doubt in my mind that once people sort of get that cheap energy basically equals the best money in the world, that's going to have a tremendous effect on the way that mining ends up decentralizing. And one last shout out to a new technology that Gridless has just created. And I'm forgetting the actual name of it. I think it starts with the name Jua, but it's basically little solar panels that are attached to Bitcoin miners. And then these Bitcoin miners can also be plugged into different parts of different farms in Kenya, where farmers are using solar panels that they've already put up, now able to take that solar energy, plug in this little Bitcoin miner and make upwards of $200 a month worth of Bitcoin at current rates. That'll obviously be more over time. $200, that much Bitcoin per month for a farmer in Africa for just taking the sun and turning it into Bitcoin, that trend has to grow exponentially because it just seems like a no-brainer. So I think there's really, really cool stuff happening in the energy and mining space right now that will only accelerate going into 2026.
I don't know, Jeff, or I have a question. Do you guys think also like from the mining supply chains in terms of the ASICs and the chips that there's also going to be that trend, like not only mining, but the supply chain? Like if some of these, right now, I think it's, still Bitmain is the largest one by far. Do you think there's going to be, opportunity for other players?
Yeah, I think it's a great question. I think that's exactly what happens from the free market. The margin creates competition. And in mining or ASICs, it takes a little longer because of because the foundries and what you have to do to be able to do that, the taping out. But that's exactly what Block did. And now so now you have another competitor that is a really strong competitor, and it'll only get stronger and stronger and stronger, and that'll happen again and again and again. Right. So that's it's really simple. There is no monopoly in a free market. The margin creates the opportunity, and what you're seeing in Bitcoin, which is completely misunderstood. That's why it's priced. It's pricing the free market, right? The first time, it's the first free market that's ever truly existed, global free market.
This is all sounding, Rod, like we felt the conversation was in the early days of Bitcoin, or at least our early days, when Abby Johnson was mining Bitcoin in her office at Fidelity, and we were, marveling. And, a lot of people were working from home, and now the technology is evolving again. And the convergence, as you say, with solar technology, the convergences among technologies, which is where we're spending a lot of time now, these convergences are going to unleash incredible entrepreneurial I think expeditions, and I think AI as well in the loop here is going to be very important.
Right. I mean, we were talking about space data centers, and maybe that's going to create
space-based data centers.
Decline in solar kind of infrastructure and hardware. I mean, maybe Bitcoin will benefit from
right. That. Oh, no question.
So we're literally, I hate to do this every time when we're like going on these brainstorms, we're kind of on our time. This has been unbelievable. Is there one kind of bold prediction for 2026 or one closing thought that we can go around the room with? Maybe we'll start with you, Frank.
Sure. I could just say, I think we're headed in this direction. And I mentioned it earlier, but just the normalization of Bitcoin, the de-taboo-ization of Bitcoin, just people looking at it as a technology that they can now use as money, that they can hold if they want to hold it, whatever it is. But I think we're just moving towards an era where it just becomes something that is ubiquitous and ideally, just like the internet, we don't necessarily think too much about using it. I think we're moving to the next phase where that becomes the case.
Well said. I think Kathy is the one that told me this at Imagine If. It's kind of like Bitcoin kind of moves away and we just talk about money. AI kind of gets evaporated and we just talk about intelligence. And then it's just energy, it's just power on, power off, and continues there. Jeff, how about yourself?
Yeah, we're inside an exponential trend that people are saying, what is the snowflake that's going to cause the avalanche? Right. And so all of these things conspire and they keep on driving faster and faster and faster inside that exponential trend. What Kathy just mentioned about the intersection of all of this, that is what's happening. And I could say, okay, what is a wild thing? Venezuela on a change and then taking all of their extra energy and going into Bitcoin, which is highly likely on a regime change, to be able to pay for their entire infrastructure and energy, which would be a giant thing. But it'll just be one additional thing in a point of a million things that are all happening concurrently.
I love the word convergence, and I've stolen it from Kathy a million times. Rory, how about yourself?
Yeah, I mean, I think that the last year, 18 months of kind of Bitcoin driven and Bitcoin linked credit has been the very beginning of the next sort of mini exponential within the context of this larger exponential that we're talking about. I think that there's a little bit of a chicken and an egg problem in getting to that next sort of step function up in adoption in kind of credit, custody, insurance, and derivatives. And we're very fortunate to sit in a seat where we see a lot of ideation, deal flow, and development in a number of these different areas. I'm pretty confident that 2026 is going to bring an absolute Cambrian explosion in adoption from a corporate, sovereign, and municipal perspective with Bitcoin linked credit in ways that extend and evolve the instruments that we've seen so far, and that will create the opportunity for the other side of the ecosystem, which is custody, insurance, derivatives. And I know that like structured products and stuff are like a bad term, but really what I'm talking about is the decomposition of risk across all the different kind of places in an investor's cap table, in a corporation's cap table, and in sort of kind of the global sort of allocations that everybody wants to take on. So I'm very confident that we're going to see things that we thought we went a long way, over the last 18 months, and what we're going to see is going to look bigger, more linked, and more institutional than we have imagined up to this point.
Well said. And if you want to just break off like 1% of that Bitcoin, I could send you an address each month.
You send me one. I
You got some
send
friends.
you two back.
Yeah.
That's the deal.
Right. That's how this
Yeah,
works.
yeah.
That's how it works.
You know this, Rod. We've done this.
I'm still waiting on my two.
Yeah.
Lorenzo, I think you and Kathy as well, you guys kind of teed it up, like thinking about like this is like the trampoline moment here for in 2025. I'm curious each of your kind of bold predictions or and by the way, big ideas. Are you guys right? Every year you guys do the big ideas. Maybe you can shed some light on that as well.
I think we're gonna like for 2026. I think we're gonna see more corporate and nation state adoption. Like we're gonna see more Legos start to fall. I think I wouldn't be surprised in Europe to see at least a couple of countries put Bitcoin. You've seen like France. I think it was like the right kind of party with a proposal. So I think we're gonna get like a couple more surprises. Especially, I think a few years back, like Tesla, MicroStrategy, and we had like a really good start, and then it kind of flattened. But I think in 2026, we're going to get more corporate and kind of nation state adoption, I think.
I'll take a crack. And then, Rod, I'd love to hear yours at the end here, too. 2026 is in the U.S. the midterm elections. And President Trump does not want to be a lame duck. So I have a feeling that he is going to work with his crypto and AI czar, right, to do a few things. One, make sure we get that de minimis ruling through. Make sure. So because, grassroots is where a lot of what we've been talking about is going to happen. But also, it seems as though there's been reticence about actually buying Bitcoin for the strategic reserve. So far, it's confiscated. The original intent was to own 1 million Bitcoin. So I actually think they will start buying because I think this will help Trump in a couple of ways. The midterm elections, part of the reason he won the presidency, I think, was the crypto community. Yes. And another reason, of course, is his family is all in on Bitcoin and other crypto assets. And they have, we talked about the DATs earlier. They've kind of fallen apart this year. So I think he's got all kinds of reasons to do this. But the most important one is he does not want to be a lame duck. He wants to have another 1 or 2 productive years. And I think he sees crypto as a path to the future.
Kathy, just like I think David Sachs said that it had to be fiscally neutral to be able to. Do you think they're going to
budget neutral?
Budget neutral, right? Neutral.
Budget neutral. The second thing that I think we'll see next year is a big surprise in GDP growth because of the OB3 and the corporate tax deductions. Like our corporate tax rate in the United States, the effective tax rate has dropped to 10%, which is the lowest in the world for any developed country. So I think and we have accelerated depreciation as the primary reason. You put a manufacturing facility in the U.S., think this about Bitcoin miners. You put a manufacturing facility in the U.S., if you start building it by the end of 28, you in the first year of service will be able to depreciate it 100% in year one, not over 30 to 40 years. So you get huge tax refunds. So I think we're going to see massive growth, and the deficit, they're going to have more degrees of freedom in which to work now.
I think a good way to start would be buying MicroStrategy, right? They have 600K Bitcoin. So if you want to get to $1 million, that's an easy place to start.
It has to go below MNAV, though, right?
Yeah, I wouldn't be touching any of these DATs or anything. I think I'm in 2026, I continue to be a bear on that. But Kathy, to that point around the midterm election, I couldn't agree more. I mean, we touched on the Samourai case. I think clicking up, just supporting and defending free and open source software development across the world. So whether the Samourai case, the Tornado Cash case, I think that would be a massive, massive win for the administration to pull in those votes and support, because that's a huge block. I do think we touched on Square and what Block and Jack are doing. I think this is just the beginning of U.S. adoption. So I do think the de minimis tax exemption comes into play. Wallets will be that much easier to use. Merchants will then train their staff to say, hey, listen, instead of the 3% that goes to the credit card companies, I'm going to give you 1% of all, whatever that the sales incentive may be. And then all of a sudden within that local circular economy community, it's like, I'll give you that 1% back. You use your Bitcoin here. And by the way, they make it so easy at those. We're going to have those point of sale systems here at each of the parks in Austin, as well as Nashville and potentially other locations, that you can just go into eventually stable coins or fiat dollars into your bank account. So you have control as the merchant. You don't need to be 100%, crazy meathead Rory and 100% into Bitcoin. You can be like 50-50, 80-20. Well, hey, I'm in the same boat as you. My time, capital, reputation is all in on Bitcoin, so we'll see how it works. But going back to the States, I do think a lot of us have traveled, or all of us have traveled across the outside of the U.S. and seen amazing case studies and success stories about how Bitcoin has leveled people's life up. And I hope that happens to the unbanked as well as the underbanked in the U.S. And I think Square and Block are going to play a really big role in that.
Can I add a final thought on that, Rod, if you don't mind? Yeah, final thought. Something that's really important. I know a lot of Bitcoiners are a bit hesitant to engage politically, and I get and respect that. I get both. But just one sort of anecdotal, there was just a moment. It was the day when I asked about the de minimis exemption in the White House press room. The majority of the messages I received that day were actually from abroad. It was from people all over Latin America, Southeast Asia, Africa, saying like, our government needed to see that. It needed to see somebody in the White House press room talking about Bitcoin as money. And I was not expecting that. I was expecting a bunch of, U.S. Bitcoiners to say, okay, yeah, that's great. But there really is this idea of the U.S. being what the U.S. is in the world of if we get this right here and we really embrace this technology and we're not antagonistic towards it, the ripple effects of this are so exponential. And these things, it's not that these things haven't already started. We talked about some of these circular economies, but if we're talking about mass adoption in some of these places, especially places where this would have such massive benefits, Turkey, Lebanon, Venezuela, places that have just been completely gutted financially, or seen their money debased. I had this conversation with Saifedean, the author of the Bitcoin Standard, last week at Bitcoin Mina. He said there's a lot of places around the world where people really still are just listening to everything that the government tells them to listen to. In America here, we like to be a bit more rebellious, but we almost need to set this thing in motion here in the States at the government level to say we embrace this technology. This is America. This is freedom technology, and to ideally see that have that be a signal to the rest of the world to embrace it as well. So
I'll just add one more thing, Rod, because you spurred another thought. In our early days with Bitcoin, we thought that countries would adopt it much earlier than they have, and that we could have an emerging market currency crisis as a result. I think if the U.S. actually says, okay, now we're going to buy, that's going to spur a lot of other governments to think this thing through. Do they want to be hostage to the dollar, and U.S. monetary policy? And, no, they don't. So put some Bitcoin in your reserves. That could in turn really create, get us much closer to really very few currencies that really matter. One of them, Bitcoin. I think dollar will still be, I think the dollar, especially with the stablecoin movement, will be the other. But the emerging market currencies, I think, could experience some serious downside volatility if this happens.
Y'all, I can't thank you enough. So happy that we were able to get this in before the end of the year. I wish you guys, your families, a wonderful 2026, and cannot wait to do this again next year with you.
And thank you,
everybody.
You are the mastermind, so thank you.
That's right.
Thank you so much, Rod. Okay, take care. Bye-bye now.
ARK believes that the information presented is accurate and was obtained from sources that ARK believes to be reliable. However, ARK does not guarantee the accuracy or completeness of any information, and such information may be subject to change without notice from ARK. Historical results are not indications of future results. Certain of the statements contained in this podcast may be statements of future expectations and other forward-looking statements that are based on ARK's current views and assumptions, and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements.